Hey there, investors. Donald Trump has officially begun his second term in office. Want to find out where you should invest in to grow your wealth in the coming 4 years? We've got a unique opportunity, because we had already experienced a Trump presidency before. History doesn't always repeat itself, but it often rhymes. So let's dive into the lessons from his first term and explore how you can position your portfolio for potential opportunities in this new Trump era. We will be breaking down the top 5 sectors that thrived during Trump's first term, and what you need to know about investing in them now. History matters in investing. Markets are shaped by policies, leadership, and global events. Understanding what happened during Trump's first term can give us valuable insights into how similar policies might play out again. Now, don't get me wrong, history isn't a crystal ball, but it's a darn good reference point. Trump's policies back then, corporate tax cuts, deregulation, tariffs, and energy independence, shaped the economy in ways that created winners and losers in the market. So what might be the same this time? Pro-business policies, a focus on defense, and energy dominance are likely to remain key themes. But what's different? AI is booming, geopolitics have shifted, and inflation is now a bigger beast. Let's break it all down, starting with our first pick, U.S. technology stocks. Back in Trump's first term, tech stocks were absolute rock stars. Companies like Apple, Microsoft, and Amazon benefited hugely from corporate tax cuts, which slashed the tax rate from 35% to 21%. That put a ton of cash back into their pockets, allowing them to innovate, buy back shares, and grow like crazy. Trump's deregulation policies also helped. Tech giants didn't face the same regulatory scrutiny they're seeing today, which gave them a free runway to expand. And let's not forget the consumer demand for tech products. Remember how everyone was upgrading to the latest iPhone? But here's the twist. In Trump's first term, AI was still in its infancy. Fast forward to today, during his second term, and AI is revolutionizing industries. Companies like Apple are integrating AI into their products, and new players are emerging. As an investor, you need to ask yourself, who will dominate this AI race? And how will regulation during Trump's second term affect tech innovation? Our second pick, U.S. defense stocks. If there's one thing Trump made clear during his first term, it was his commitment to military spending. The defense budget grew significantly, and companies like Lockheed Martin and Raytheon were direct beneficiaries. Lockheed Martin, for example, saw a surge in contracts for fighter jets, missile systems, and more. Trump's America First policy also emphasized domestic production, which gave U.S. defense contractors a competitive edge. Now, as Trump's second term unfolds, defense spending remains a priority. Geopolitical tensions have only increased, and a strong military is still at the forefront of his agenda. For investors, defense stocks offer a compelling mix of stability and growth potential. Our third pick, U.S. infrastructure stocks. Remember all the talk about Trump's $1 trillion infrastructure plan? While the execution fell short during his first term, the optimism alone was enough to boost industrial stocks like Caterpillar. Caterpillar, a leader in construction equipment, saw its stock rise as investors bet on increased spending for roads, bridges, and other projects. Even though the plan didn't fully materialize, the promise of infrastructure investment created opportunities. Now that Trump is in his second term, he's doubling down on infrastructure spending. If these plans gain traction, companies like Caterpillar could see another wave of growth. For investors, industrial stocks are a great way to capitalize on this theme. Our fourth pick, gold. Gold, the classic safe haven asset. During Trump's first term, trade tensions with China and geopolitical uncertainty drove up demand for gold. The SPDR Gold Shares ETF, or GLD, became a go-to for investors looking to hedge against volatility. Gold thrives in times of uncertainty, and Trump's unpredictable policies, think tariffs and trade wars, created plenty of that. Now, during his second term, we're seeing similar dynamics play out. Trade tensions and inflation concerns are pushing investors back into gold. So if you're looking for a hedge against market turbulence, gold is a solid option. Our fifth pick, U.S. oil and gas stocks. Last but not least, oil and gas. Trump's first term was a golden era for fossil fuels. He rolled back environmental regulations, approved projects like the Keystone XL pipeline, and made energy independence a top priority. ExxonMobil and other energy giants benefited from higher production and lower regulatory costs. Oil prices also saw periods of strength as OPEC cuts and geopolitical tensions played out. Now that Trump's second term is underway, his support for fossil fuels continues. But keep in mind the growing push for renewable energy. As an investor, you'll need to weigh the long-term risks against the short-term gains in this sector. Wrapping it all up. All right, let's recap. During Trump's first term, these 5 financial instruments stood out. U.S. oil and gas stocks thrived under deregulation and energy independence policies. Gold was a safe haven asset during trade tensions and uncertainty. U.S. infrastructure stocks. Optimism around infrastructure spending created opportunities in industrials. U.S. defense stocks were boosted by increased military spending and domestic production. U.S. technology stocks benefited from tax cuts and deregulation, with AI now adding a new layer of opportunity. Now, here's the thing. History doesn't always repeat itself, but it's a great guide. Trump's policies in his second term might look similar to his first, but the world has changed. AI is booming, inflation is higher, and geopolitics are more complex. So do your research, stay informed, and remember, investing isn't about predicting the future, it's about preparing for it. Thanks for watching, and I'll see you in the next video. Subscribe for more investment insights. Like, comment, and share.